Hello investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk to you about Robinhood. So Robinhood just put out their results last night for Q3 21. So we're going to talk about that. We're going to talk about its guidance. We're going to talk about its path to profitability and really why that's not so attractive for me as an investor. And then we're going to talk about its valuation. So just going to jump right in. So here's the thing, right? So back in August, I wrote an article about Robinhood, and I said that I concluded with the thought that there's too much risk and not enough upside. And since that time, the stock is down approximately 12%. This does not include the after hours that is down 8%, so it's actually down quite significantly from the $45 when I first addressed that. And one of the things is that even if in the long run this investment works out favorably, in the long run we're all dead, and it's important to think about holding through those losses. It's going to be like, let's say if you're holding for like 2 or 3 years to return to $45, I mean, it's going to be very difficult because there's not a lot here to compel new investors to stock. I'm not talking about investors that are already kind of entrenched and holding on. I'm talking about holding on to this idea. I don't think there's enough here. So the guidance for Q4 is pointing for approximately 2% year-over-year growth. Okay, so if you think about it, right? So at the start of this year, Robinhood was growing at 300%. I mean, people were just like, oh my God, Robinhood. And then as we've progressed over the course of the year and looking out to its guidance for Q4, it's kind of fizzling out. And you're thinking to yourself, okay, what is the growth rate going into next year? Because it doesn't look so strong. So this is the question that I have, and I don't have an answer for that, and I'm sorry. But I mean, just think about that logically. What can be the growth rate here? It's very, very difficult to come to terms with that. And it's really building that conviction that's quite difficult. One of the things I want to highlight, so as you might know, the bulk of its revenues are very much contingent on crypto. Crypto does well, and that gets a lot of attraction within Robinhood's users. And if crypto is kind of like then the appetite for trading crypto is not so strong. The 10Q is not out right now. They'll probably release the 10Q in a few days. Sometimes in the 10Q you can look in, and if you look at this video in a few days, you could look in at the 10Q file and see where the revenue is coming from within crypto. Last time they reported was Dogecoin, but I don't have in front of me the file at the 10Q. They haven't published it yet, so I don't really know where within the cryptocurrency which one is doing particularly well for them. But you can see there's really a dip there. You can see the green arrow and you can see the red arrow, how they've kind of just not making that much from crypto anymore. The other thing that I want to highlight is that the attraction of Robinhood is about trading, right? And if the market is kind of like flattish, the appetite for trading kind of goes down and the number of active users goes down, and here's where things start getting interesting. Okay, so I'll just before I get into the interesting part, so you can see that even on an adjusted EBITDA metric, okay, so this is like everything being added back in, like anything that you can think of that they can possibly make the case that is one-off, being added back in. You can see that over time, as Robinhood's growth rates kind of slow down, that its EBITDA margins are not that attractive. So coming out of Q3, it was negative 23% EBITDA margins. So I mean, it's like so far from being profitable. It's like crazy. Anyway, here's the interesting part, right? So I already discussed that users come in, they fund their accounts. That gives Robinhood a positive net working capital. On the other side of the equation, kind of users not very attracted to this, and they kind of start leaving or churning out of the platform. They take the capital with them, and you can see here payables to users was negative 958. Let's just call it negative $1 billion, just for round numbers. So users coming out of pulling out their capital, and you know that's why it's very difficult. You can see that in the same period a year ago, their working capital, their net cash flow from operations was negative 500 million, and this time around it's pretty much double. So it's like they're really burning through a lot of cash. Okay, and you can see here, so on the screen, so net cash held by users last year was 4 billion, and this year's dropped to 3 billion. These, they've just kind of taken out the decimal points, but you will see here that you can see that the cash held by users, the gross cash, has gone up approximately 33% from 6.6 billion to 8.8 billion. But you can see here that the amount of margin is actually up 170%. So you're having less cash coming in relative to the amount of margin. Like, this is high margin with a lot of customers using crypto. What could possibly go wrong here? There's a lot of shares coming in after the lockup. I'm not even going to go into that. So, I mean, ultimately, it's just trying to think through here. So the stock is priced at 12 times forward sales. Now, it's forward sales relative to analyst expectations that the company is going to grow at approximately 35% next year. So it is very, very difficult to predict what this company is going to grow at. Okay, it's not a stable, predictable business. It is highly volatile. It's kind of been traded like a SaaS stock. This is so far from SaaS business. There's no subscription here. This is incredibly volatile in a highly leveraged. It's just crazy. It's going to be very difficult to build any sort of conviction here, and you've got all those losses as well to fund. I think the stock is only down 8% after hours, but I mean, I would not be surprised. So what is my calculation here? So I would not be surprised if by the end of the year this stock is actually down below 30%, below $30 per share. It's very difficult here to kind of build the conviction to hold on to this investment. I mean, I don't have any position here at all whatsoever, but I'm just kind of highlighting that I think through this, and it's difficult to get it compelled here. If you want to find out what stocks I'm interested in, don't forget to check out my marketplace. It's called Deep Value Returns, where I help you become a better investor, help you think through the framework of building a portfolio, and help you generally compound your assets at a reasonable rate. Okay, thanks very much, guys, and see you next time. Bye-bye.